Welcome. Thank you for joining us today. This is a closer look about understanding your profit and loss statement. What that means is this is your time to learn more about what Ken presented last week during the webinar session, whether you watched it live here or the recorded version that we post online for members to review when they can. In addition, I wanted to say something right now about the fact that the presentation download documents, if you haven't had a chance to do that yet from last week's sessions, they include an example statement for you to fill in the blanks essentially with your information. It's a spreadsheet, an Excel spreadsheet. So Ken provided that, and that's very helpful. I am recording this session too, so you're welcome to watch later if you want to review. Now, a few housekeeping details. To ask a question, you can use the chat function, the Q&A area, or simply raise your hand and I'll call on you and you can ask your question out loud, whichever you're more comfortable with or whichever one you can figure out, because I know this Zoom stuff is new to some of us and it's not easy to learn the first time. So let's get started. Last week, Ken had a few things. I'm waiting for Ken to show up yet. So I'm just, well, here he is. Ken's here now. So Ken, hi, welcome today. I was just getting started.
Hello.
You can show your video, I think. Let me make sure you have permission to do that. Yes, you should be able to show your video. So if you can do that. I wanted to start with a few items of clarification that you had from last week's presentation.
All right.
So the first one was the accrual versus the cash basis, and you wanted to explain that in a little more detail. The question I asked you during the presentation last week.
Yep. Do you, can I put my video on yet?
Yes,
No?
please. You should be able to.
It says I can't stop because,
Oh,
I mean, let me.
okay. Sorry. You should be able to do it now. There you go. Sorry. Like I was saying to everyone right when you logged on, sometimes the Zoom stuff is difficult for us to figure out. Not only people who are on it for the first time, but some of us who do it all the time.
I might actually switch to my laptop, Amanda, in a minute.
Yep.
But for this anyway, you asked a question. So I, again, I'm not an accountant or anything, but the question came up about accrual versus cash basis. I think you asked that, Amanda, and I was talking in terms of cash basis, but I talked to my bookkeeper. We actually use accrual basis, which basically means that the accounting package will recognize money received or expenses created the minute you input it, whether you've paid the bill or not. So some, so that's accrual basis. Cash basis is it doesn't get accounted for until you actually pay the bill or you actually put the money in the bank. So we do accrual. So when we're ready to invoice a client, we invoice them for $10,000. If I pull up a report, that $10,000 already shows as income, whether I've received the check from the client or not. I expect to get that money. It's going to go in my. So it's actually for us a better way of keeping track of where we are in a job. If I know it's billed out, I should be getting the money, but then we can always go back and look and say, is anything over 30 days or 60 days? So for us, it's really an accounting question for your accountant, but accrual basis seems to work easier for us because we do data entry almost daily, I guess. When invoices come in, we put them right into our system, and then we pay our vendors. If they send us an invoice, that goes against our books right away. So I think we have a quicker picture of where we stand financially. If anyone has any questions on that, I'll try to answer it.
Well, that makes sense, Ken, for your situation, because you usually work on contracts where people are going to pay you, right?
I expect them to, yeah.
Yeah.
Fortunate, yeah.
For people, well, and I would hope that would be the same for all CMA members, but some people who aren't sure about their accounts receivable might want to do the cash basis.
So why would you be unsure about your accounts receivable?
Well, for example, the CMA does cash because we're not sure that some members are going to renew. We send an invoice for everybody, but we end up voiding a lot of those invoices when they don't.
That makes sense. Yeah. Yep.
that's one situation that I know works for cash, but for the most part, I think accrual would make more sense for our members.
I think so, because we're doing, we're not fishing for, for money, so to speak. Maybe that's the wrong way to put it, but people come to us, we quote a job, they say, go ahead and do it, and we get we get an invoice out to them or a deposit, we get invoices in for materials purchased right off the bat. So that's the way it works good for us. I hope that, helps answer the question.
Yep, that makes sense to me. Now, as a reminder to everyone, if you have a question about what we're talking about right now, feel free to ask that. Or if you have any other questions you came prepared with, you can ask that at any time and we'll address it as time permits. Now, you can do so again through the chat section, Q&A section, or simply raise your hand and I'll call on you and you can ask your question out loud. So we're going to go on to the next thing you wanted to explain and clarify from last week. Ken, did you want to switch to your laptop?
Kurt's with me, and so isn't Matthew. So we're just trying to get it on the laptop. Kurt's trying to figure it out. He's my IT guy right now.
Right.
No, I still got you. And do we have? I can't tell. Do we have some people on here with us?
Yeah. Oh, yeah. We've got a good crowd. So
Great.
We're
Great.
good. So the other thing you wanted to clarify was the labor expenses and the cost of goods sold versus the officer's salary.
Yeah. So I think this gets confusing for me too. The way I'm set up is I'm an employee of my corporation. I'm the officer of the corporation. I'm not working with the tools. I'm not working to build the stuff. So I'm in the overhead category. I'm under the line, so to speak. If I was working in the shop, I would put my salary under cost of goods sold because I'm working directly for a project for a client that's billable. And that's what really helps me tie into my estimating as well. I really look at the two as hand in hand. So, for some folks, I think when you're a DBA or individual, you're not a corporation, then I don't think I think the way it shows up in your tax return anyway, is that it's kind of what's left at the end is what your income is. Maybe it's just a entry into your accounting system, the way that you might put it. You could split your time 50-50. And it's just the accounting package is nothing more than rows and columns with, little buckets to put your numbers in. So I still suggest keeping track of your own time towards a job, building cabinets, or the other side of it is if you're doing sales, business management, some stuff in the office, meeting with your insurance agent, stuff that's not job related, try to split that time up. The reason I like to do that is I like to, actually I keep a time card myself. And when I'm working on a project, whether it's project, I'll go out and do some project management, meet with a client. If I'm doing that, I charge that time in QuickBooks to the job. So when I look at a job report, I can see that, hey, I had 20 man hours dealing with these people for whatever reason, working with their architects or designers or helping my guys field measure, whatever it might be. And that helps me get a truer sense of what it costs me when I'm estimating a job.
That makes sense to me too. I think now might be a good time to show that blank template that we shared with the download materials, just to talk about some of these buckets you were referring to.
Yeah.
Over here on the screen. Can you see the screen, Ken?
I can see it. Yep. I can't control it by any means, but that's okay.
Yeah. Just tell me if you need me to move anything.
Please use this at your own risk. I kind of, I'm an amateur at Excel, but I can make things add up and do some percentages. So this is kind of like a mini version of what a profit and loss statement might look like. There's nothing here that's scary. It's all stuff that everyone's doing already. It's just, how do you categorize it? And you can have as many or as little categories as you want. It depends on how clear you want to be with your expenses and how you want to look at it when you're looking at last year to this year type of thing. Do you want me to just run top to bottom again, kind of how we?
Yeah, I think that's a good idea, just for a nice review.
And this might be just something to do as kind of a little bit of homework, and you can just estimate numbers if you want, even as we go along. But income, again, is just your sales, your contracts, whatever it is you're doing for receivables is income. Let's say you did $300,000 in sales. That's just the number. And you can use this is kind of a what if as well. You can say, hey, what if we did $350,000 in sales instead of 300? How does that affect things? Again, I look at this, as we start to go down the cost of goods sold, materials, subs, or labor. I put two categories there, the employees, so you guys that you might have help you in the shop, versus the owner operator working on cabinets. This is working on cabinets now. So when you're entering things, or if you're doing it manually, if you're taking $50,000 a year, you might put $25,000 in there for the year and $25,000 down below. But this is everything it costs you to build a cabinet. And that orange line is kind of an accumulation of that. If you want to play around with it, Amanda, as we go and just throw numbers in, you'll see how it affects things.
Oh, sure.
Yeah. So maybe if you're able to,
Yeah.
if you think this is valuable, I'm just trying to.
Sure. No, that's a good
Explain
idea. You did throw some out there. I should put them in. So you said like
Yeah,
35.
say it's $300,000 in sales for the year.
Oops.
Let's say you're doing a budget for next year and you say, hey, I think we're going to do 300 grand.
Sorry, my number lock is on, so it's being goofy. No, it's being goofy.
There you go.
Ken's here again.
So this might be easier for me to see. I'm sorry, but in my iPad. Wow. What a profile.
Give us a moment. We'll Ken get set up on his other computer so we can,
I'm going to shut that one off.
and then that probably have to allow you to.
Sorry about that. All right, I got you now.
I'll ask you to start video on the other one. There we go.
You got me?
Yep, you're there.
Hey, thanks. Sorry about that. So yeah, so 300 grand in sales, and let's say, based on last year, you did about the same amount and your materials were 150,000. And again, I'm just throwing numbers out there, half of your cost just went into materials. Let's say, $2,500 in subcontractors. You had an electrician come in and help you wire something in the cabinets, perhaps. Let's say you had an employee that earned $40,000 last year. You're expecting to put someone in at such and such a rate, $20 an hour.
Mhm.
They're going to work 2,000 hours. And then as an owner operator, again, this is for the year. Let's say you just wanted to plug in that, hey, I'm going to get paid for $25,000 worth of my time working on cabinets. So we're using this now as a what if. Really what you should do is go take last year's, pull it out and put the real numbers in. And if it's confusing, just pick a category. It's not life-changing here as far as where the numbers go. But if this is what our year looked like last year, or this is what we're projecting this year to look like, then the way I look at it is it costs 72.5 cents for every dollar that you bring in. It costs 72 cents to build the thing. So there's 27 cents left over to pay everything else. So in this scenario with 300,000, you have a gross profit of 27.5%. That looks pretty good, especially since you got paid above the line. So you've got 82.5 for the business to be in business. So here's just I left the top one blank, but there's a bunch of expenses that you can, again, use as you want. Advertising might be shirts. It might be marketing in magazines. It might be, hiring someone. I don't know. But this is all stuff that automobile expenses could be gas, repairs, bank service charges if you have any, computer expenses, the computer went down or you hired someone, dues and subscriptions, your CMA, that's a very valuable thing that should have a number in it. Insurances, you can break those down. You can have them add up together at the bottom. You can put them all in one lump sum if you like. We break ours out. These are the different insurances that we pay. And if you just feel free to plug numbers in if you have some sort of inspiration on it, Amanda, just to see where we go with this type of stuff. Do what you think might look good.
Every time I do that, it goes down. I really apologize.
Yeah, the numbers lock thing, right?
Mm-hmm. Mine's been acting up lately. You got to put the CMA dues in there. That's the only one I know the number for.
So let's say meals and entertainment, you took some people out to dinner through the year, you plan to put $500 in that one maybe. So see the one that says officer's salary? That could say owner's salary. I'm an officer in my corporation. It's just a term. It doesn't mean anything. I still sweep the floors. So I would say officer's salary, let's put 25,000 in there as well. So in this, what if you said, I'm gonna put 25 grand towards my cabinet making and 25 grand to pay me to be a business owner, to run a business and put up with everything and deal with all the stuff that I have to deal with here. And you can work your way down. Rent expenses, let's say you pay $1,000 a month in rent, you could put $12,000 in there, that's gonna be pretty consistent. I have repairs and maintenance for the shop itself. Let's say, a window breaks, the roof leaks, or, if they're smaller repairs, not capital improvements. Tools and equipment, we have to fix the wide belt sander or the edge bander or something. So you can throw in any number you want in there, Amanda, $1,000 or something as we go.
Shop repairs are gonna be a little more.
Yeah, so as you'll be surprised at these numbers if you really look at your numbers, you'll be surprised how much these small numbers add up to, that money that was left over up at the top. So retirement expenses, we have a retirement plan for the company, for the employees, and so we do a match. So we there's a number that goes in there, telephone and internet, cell phones and, the Wi-Fi stuff, anything we have that we're dealing with for electronics, I guess, we kind of put there. Travel, travel to a CMA event, travel to a job site in New York City, parking, anything, any way that you want to categorize it. These are all legitimate expenses. And basically those expenses at tax time come off of your leftover money above. So, so this gets deducted. So you're not paying taxes on all this stuff. It's money that's being used to keep your business alive. If we stopped right there, this is a pretty damn good year for a $300,000 company. You made $50,000 for the owner, working in the shop half-time, working on the business half-time, made $50,000. Okay, call it $1,000 a week. And at the end of everything, you had $41,000 after you paid everything that had to do with being in business. You had $40,000 left over. You can, you're going to pay taxes on that if you're a sole proprietorship or you're, doing a DBA or LLC. As a corporation, I'm a C corporation. Either my company pays taxes on that money at a corporate rate, so I would pay taxes on 41,000. The company would pay taxes on 41,000. Or as a business owner, I could bonus out half of that or all of it if I wanted to, and pay personal taxes on that, just like so in most situations, that's just going to get taxed at whatever rate the business owner is going to be at. That's going to count as their income too. So in this particular case, at tax time anyway, you're going to get taxed on $91,000 of personal income. So those deductions are important. It's important to track all these expenses. Number one, for taxes, and number two, to know that you have enough money to stay in business. Let's say we're looking to grow. We're going to get kicked out of where we're renting. We're thinking of buying, or we want bigger space and our rent's going to double. We could do a what if. Let's say our rent doubled. Let's see what happens if that went to 24,000 next year. Hey, it's still okay. We still have 30 grand we made. But our overhead number went up to 18% and our net profit is at 9%. I've heard, and I don't know if it's true or not, in the construction trades anyway, that the industry average is 3 to 5% net profit at the end of everything after the owner gets paid. Let's say you said, hey, I got to make more money. What if we put officer's salary at $50,000 there? We still made 25 grand for working in the shop and 50 grand to work on things. We still have a very small profit, 1.5%. Our overhead cost us, 78 grand, 26% of income. So 72% went to building the cabinets, 26% went to keep the business alive, including paying the owner of the business a decent salary. And there's 4 grand at the end of the year. Doesn't mean there's 4 grand in the bank. Everyone says, well, where did it go? A lot of times let's say you went and you bought a bunch of tools. You use profit to buy tools. You use profit to buy trucks. You threw a Christmas party for a couple of grand, but you got to know that you have enough money coming in to do all these things. So, this is kind of a quick glance with some random numbers. But what this tells me, let's just back it up a second, Amanda. And again, I don't want to, anyone can butt in at any time on anything here. I'm just going to keep talking unless you push the mute button. Let's say on the 50,000, you went back and kept that at the 25,000 officer salary. Okay, so right now we've got a gross profit up above. let's say everything else stayed the same next year. We have a gross profit of 82.5 or 27%. If I want this, if I say this is what I want every year to look like, this is great. I'm making enough money. My company's making some extra money. I want to do this next year and I expect the exact same volume. When I go and do an estimate on one job, what I want to do is I want to make sure that I'm getting 27.5% gross profit for that job. So anything above that green, those four little categories there, that's all that we sell: materials, subs, and labor, and markup. I want to make sure that I'm going to get 27.5% gross profit if my numbers are good. So I'll do an estimate and I'll say, my highest paid guy is without taxes and burden is $50 an hour or something. Like, let's say I pay a man $50 an hour, and that's included in that employee. I'm sorry, let's say I give him $20 an hour. So for a year, that's $40,000. I can look at that in my estimate and say, okay, I get so many man hours times $20 an hour. I've got myself in there at $25 an hour when I'm doing an estimate. I know my material costs. I don't have any subs. I come up with a cost of goods sold to sell one kitchen for $30,000, let's say. That's my cost, including my time to work in there on an estimate. Now, and we have an estimate sheet we can show later. But I still want to make 27.5% gross profit. So when all these other things are paid at the bottom line, I end up with that number that I want. So how do I do that? Just take my costs and multiply it times 1.275. That's not right. And if so, we want a margin of 27.5% gross profit. We have to divide it by the 1 minus 27.5. So what's 1 minus 27.5? It's 63.5. Does that sound right? 62.5. 62.5. So I would take whatever my cost of goods sold is, whatever my estimate was, labor, material, subs. I came up with a number of $30,000. I would divide it by 0.625. That would give you my sale price. Does anyone have a calculator? I can do it. And I'll do another quick example that really helps. Oh, thanks. I got great people around me here. Just got handed a calculator. So 30,000. If I did 30,000 times 1.275, I'd sell the job for $38,250. So if it cost me $30,000 just to build it with no profit at all, just paying, not even paying for my business, just paying for the material, subs, and labor, and I marked it up times 1.275, I'd sell it for $38,250. If I take 8,250, which is the profit, divide it by 38,250, which is the sales price, I come up with a 21% gross profit, not 27.5. I'm missing the mark. And that accumulatively will put you out of business if you need to make that money. So really, and it sounds like trickery really with the math, but it's fun. Let's say it's 30,000 cost of goods sold. I take 1 minus the 27.5 desired gross profit percentage. So I go 1 minus 20, which is 62.5. So divided by 0.625, my sell price is now 48,000. It cost me 30 and I'm making $18,000. Sounds like a lot, but look at all the expenses you got. So if I take 18,000 divided by 48,000 sale price, sorry, pushing too many buttons here. Yeah, the number is 72.5, right? 30,000 divided by 0.725. That's 41,380. So 13,380 divided by 41,380. I should end up with my 27.5% gross profit. It's easy to do if I had a marker board or something to do it, but to show you. But the math works if you take your desired gross profit, take your cost of goods sold, divide it out. So here's a good way to do it. Let's say we only did one job for the year, and it was, what's that top number? 300,000.
Yes.
So let's say we only did one job. I know it's an accumulation of jobs. Let's say for this example, we had one job for the year. It's going to be, that's all we're going to do, work on one job. It's 300 grand. So let's say, our cost, let's say we did all this is our estimate, material subs and labor. We think our estimate's 217,500. And we say, okay, I want all these numbers to work. I want all this to pay for my business and have that profit that I desire at the bottom line. If I do 217,500, which it costs me, I go times 1.275, my sell price is only 277,312. I missed the mark. I don't have enough money at the bottom. If we scroll down to the bottom, what's the gross profit? I mean, the net profit dollar supposed to be?
29.
Yeah, 29, and I got 27. So I missed the mark. And if we're running really tight for the year, something doesn't go our way, that can just diminish our profits, or it comes out of owner's salary, really.
Mhm.
So let's go back again. Let's go back to the top. Let's say I figured out the job and it was 217,500. I want to divide it by 0.275. Is that right? 0.725. $300,000 on the dot.
Mhm.
Does that make sense?
It does to me. And the important things I think you're noting here are that the profit and loss statement helps you determine your gross profit
Yep,
for estimating. And
exactly.
also your pay is the important variable that you need to work on.
Yeah, let's say you couldn't go in the shop. You have something you have to take care of, or you can't work in the shop. You broke your arm and you got to bring someone in, you got to pay them. It's only going to come out of you if you don't have it already calculated into the cost of the job. Someone's got to get paid for it. If it's you, if it's somebody else, someone's got to get paid to build that cabinet. If you were working down the street, you're going to get paid to build that guy's cabinet. You own a business. Your business needs money to stay afloat, and you need to be compensated for running a business. It doesn't have to be anything big or greedy or anything like that. But there should be a number in there for when you're estimating a job for your time to do the job.
Yeah, understood. Now, can you move your camera so I can see more of your face?
I can't see me, so I don't know. Where am I? Am I not in here?
The top of your head. There we go. Good. Thank
I
you.
get asked that all the time.
So one of the questions that was asked is how often should you review the report?
So profit and loss, I look at a minimum of monthly, but I probably look at it more like 3 times a month. If I look at it on a Friday, I either have a good weekend or a bad weekend, depending on how things look.
Yeah,
Keep in mind, it's only a moment in time. So you got to look at the whys. Why does something look low? Let's say I looked at it, Friday, and something looked off. I was in the negative. That bottom number on my profit and loss was a negative. The way that I do the accrual basis, it may be that I'm due to send an invoice out on Monday for $30,000 for work that's already completed. So all my expenses are showing up on my report. None of the income against that has shown up yet. I invoice my client. There's some profit built into that. All those numbers change with the click of a button. So the minute I invoice my client for $30,000 or whatever that number is, so I might look at it on Friday and go, oh, we get a bill to go out on Monday. That's going to change. I'm okay. Or I might say, we got a problem here. What the heck is going on? What's going on with this particular job? Sometimes we miss the mark, doing a special one of a kind super job that only we can do faster and better than everybody else. And we don't, we miss the mark. It happens. It happens less because we're still in business, but it happens. So just got to learn from it. You can't beat anybody up. Nobody does it intentionally. It happens. But sometimes I'll look at a report and go, man, we're killing it. All right, calm down there, Rusty. We got to look at, we don't have all the bills in yet. We got a whole pile of stuff that got to get entered into. The bookkeeper was out last week, and we have a bunch of bills to enter. Let's see where we're really at. So again, look at the whys. If something looks off to you, look at why, and dig in. With these accounting packages, it's literally a double click on a number, and you can go in and look at it. And I'm not an expert on QuickBooks or accounting or anything at all, so I just know where I'm allowed to push buttons, and it gives me the information I need. I had a consultant come in years ago and just set up 3 or 4 reports that are in QuickBooks, and it says Ken's reports, and I know how to read them, so I can look at it and say, yay or nay. And it's frustrating. I want a good report card every time I look at that thing. But it's grinding it out, estimating the jobs correctly. You know, when you look at this estimate sheet, do we have that one?
Yeah, I can pull that up a second. I was just gonna mention that.
You know, if you don't,
Hang on.
I'm willing to share this as long as it's at anybody's own risk. You know, I didn't check all the numbers or, you know, I plugged in certain numbers for rates and so forth. So this is estimating. It doesn't look much different than the P and L. You know, Kurt's with me right now. Kurt does all the cabinet estimates and he plugs in those numbers. If I say, how do we come up with this number? He can back it up every time, you know? And I say, geez, how, you know, why does that, you know, can we really do it that quick? Oh yeah, that's an overlay job. Or boys, you know, I'm usually saying, oh, why is it taking so long? But, you know, we have reasons why, and he can justify it to me. So I trust his methodology, you know, his methods. We've worked it out, you know, and we're still working it all the time. But when we're building cabinets, we know that there's so much materials. He gets prices on everything, especially with things bouncing around so much, things are going up. So we'll put our list of materials together and have some costs there. It might be hardware, sheet goods, hard goods, might be some blades in there, might be something that we need that's special. We got to order a bracket. So we just plug those into the yellow things, the yellow cells, and the orange will just add it up automatically. So I know what my material, that's my cost of materials. I haven't made any money on it yet. It's just, I got to buy this stuff from my vendors. They're going to send me bills. I'm going to put it into QuickBooks. You can plug in your own rate here. This is more for reference. This doesn't tie to anything, but just to keep in mind, you know, what are you going to pay people or what are you going to pay yourself per hour working on a job? This isn't your salary late, you know, for being the business owner. This is just, what is it going to cost you to build this stuff? So you might break down some categories. If anybody saw the job costing presentation, it kind of ties together with this. So I estimate, we estimate by hours, you know, it's typically half days, full weeks. So we might say, oh, it's 4 hours in estimating, it's 2 hours in order, you know, it's number of hours. It's per man. So if I have 2 guys unloading a truck for 2 hours, I put a 4 in there. So, so we just kind of, we have different categories. We have job code numbers and stuff, but these are the things that go into building a cabinet and getting it out the door. You might add delivery in there. You might add, you know, whatever has to do with building the cabinet labor wise. So if you were to plug some hours in, you could change the rates however you want to do it. But if you start to plug hours in, it'll start to add up some costs for labor. That's just your hard costs. If someone's on the books and you pay them $25 an hour, it's going to show up as, you know, number of hours times 25 equals X. Your overhead is there to cover your insurances and so forth. So I end up with a labor number. Right now it says 0. But if we slide down a little more, you know, you could put subcontractors in there as another cost. I didn't happen to put that in, but you could even just write subs under one of the, you know, up above where materials are. I could add it to a list if somebody wanted me to, if you had subs. But basically, if you wanted to play around with that for a minute, Amanda, let's go up and let's estimate a job.
Okay.
So this is the CMA job, and we got some materials. Just you can list the name of them if you want, or you can just say, you know, 500, 200, 300, just type in some numbers.
Oh, now my number lock is working. This is gonna be an expensive job.
So we're doing a kitchen for Amanda right now. And this is plywood, hardwood.
I have no idea how much it would cost.
Yeah, that's okay. Let's say that was it. Let's say it's a small job,
Okay.
you know, whatever it is. And that's hardware, and you can put a name next to them if you'd like somewhere, and whatever you want to do.
Just so people can see that. they
Yeah,
can-
that's the
Okay.
kind of stuff. And then, okay, let's say estimating and sales, you know, you don't have to check. Some people just say, oh, that's my marketing, blah, blah, blah. But, you know, if you wanted to put estimating and sales, that might include doing some templating, or I don't know, whatever it might be. But let's put 3 hours in there. You went out and met, you know, you're going to go out and meet a client and an architect, and it's going to take some time. You got the job, you're going to unload the truck. So there's, you know, 2 hours to unload a truck. You got somebody helping you there. Doing the drawings is probably more of a senior person, you know, and maybe there's 4 hours drawing it. The CNC, you might charge a higher rate for the CNC if you wanted to combine a person and the machine. So you could change that 75 to 150 if you wanted to. You know, let's do that. Why not? And let's say you're gonna have, 3 hours of CNC time. You're gonna have 8 hours of fabrication, 8 hours of finishing. Whether you install or not, you could put some numbers there. I put specialty, sometimes it's decorative brackets or something unique about a project. We gotta spend a little extra time. It makes you think through the project. It makes you build it on paper and build it in your head. Because we forget so much. And this is a good list to create. You can add as many lines as you want. So altogether, based on the rates that we're using for various people and the hours that we think we're gonna have, we're coming up with, what's that, 1965 in direct labor costs. That's what it's gonna cost to pay a guy, the materials up above. So we got 4765 in, that's just what, if you sold the job for 4765, all you'd make is an hourly rate. And you wouldn't have enough to pay your rent. You wouldn't have enough to pay everything else. If you divide that by 0.65, looking for a 35% gross profit, your sell price would be 73.30. So the difference between those two numbers is your gross profit dollars. That's what shows up on your profit and loss, an accumulation of all these little estimates. So, 4785 went to overhead, went to pay, after you got, that's the markup. That's how we get to the gross profit, is divided by 0.65. We've accounted for our costs, and that 35% will pay for the materials. It'll pay for keeping the business alive and whatever's at the bottom line that you. So again, you can do some what ifs. You can say, geez, what if I went up my rate a couple of bucks here? What if I, this is too much. I'm never going to get the job I need. Let's divide that by let's say that 0.65, you change it to 0.7.
Working on it.
So it came down a little bit. The higher that divisor goes, the lower the sell price is. You might say, hey, you know what, 6,800 bucks, I'm still happy with that. I'm still gonna make a couple of grand on this thing and I need it right now. It lets you be in control of that. Because if a guy tells you, hey, for $5,000 you can have the job, you're gonna make a couple $100 on this thing. 235 bucks. You're gonna say, no, it's not worth it. I'm gonna go chase a different job. So this just happens to be the way that we estimate jobs. We've done this so much that we can look at a typical job that's similar, and we can maybe come up with a per lineal foot price on that. If we looked at this and it was a 6.8 foot long job, we might say it's $1,000 a foot for our cabinets, right? If we did $1,000, we're going to come up with the number that we want. But I don't trust that. That's not how I learned to do estimates. I have to think of it in terms of labor, materials, subs. And that's what works for me. It seems cumbersome, but it's more accurate. And this also lets you, when you start doing your job costing,
Track it better.
yeah, we can track it. And Kurt and I look at these jobs and say, all right, how'd we do? Where'd we do good? Where'd we miss? If we're always killing it on finishing, we might say, you know what? We're losing some jobs. Maybe our finishing, we don't have to get it, we're estimating too much hours. Or we could say, hey, we're not making them, we always seem to be 20% over in fabrication. What's going on? We replaced some machines. We upgraded some stuff. We have different methods of doing some joinery now that help us speed things along. A lot of the stuff we learned from going to shows with CMA and meeting people and vendors and seeing new tools and techniques and just talking to people. So there's value.
You said last week that was your decision to get a new machine, a new edge bander, I think it was, because you realized you were taking a lot of time on that process.
It was killing us. You wouldn't think it, but it was killing us. Every piece that came out had to be reworked or retouched or redone. And we bit the bullet and bought it. And just the notes I get from the guys in the shop or the pictures is just saying, wow, what a difference, what a difference. There's a whole attitude adjustment, on that too.
Of course.
But it's
Okay,
it's
we do
helping
have
us
a few
with a
other
big-
questions, so let's
No.
keep moving here. So this
at least once a month, I guess, I'm looking at your numbers.
yeah, no, that's a good, at least once a month, and then especially to change your markup. And this question is about the markup. They're curious what other shops use for markup metrics on refacing with third-party doors, and also the markup beyond cost of goods sold and labor.
So I'm not sure what other shops use for markup, but I can tell you that the way to figure out what you need for yourself on markup is to have a good understanding of your profit and loss and looking at those percentages.
Exactly.
And work with your accountant or your bookkeeper to understand those numbers. Don't be shy. I used to hate asking questions. I don't want to sound like an idiot. I own the business. I should know everything. Now that I do, it's better.
Sorry, your job costing presentation did a good job talking about that in a little more detail, I think, though. about
Yeah,
how
just give a
determine
chance to
your-
look at that. So again, third-party doors, you mark up beyond cost of goods and labor. So again, I would try to understand your costs for your business and come up with the proper markup, or margin is a better word to use, to make sure that you're making money. But, I imagine that big or small, as you go through it, I bet as you start to look at it, the percentages probably come close. Higher volume might mean higher overhead. But at the end, I think the percentages probably all kind of fall into some certain range. It's just my guess at, unless you have some extraordinary high rent district or something that's unique to you. But at the end, you should be able to look at that with your accountant. Now's a perfect time. Look at last year and say, help me understand my profit and loss. What am I doing? Am I making money? Am I not? Why? It'll help you make some decisions.
For sure, for sure. Now, I just want to open it up again for any other questions from those of you on the call. If you had anything you wanted to ask, not even necessarily about what we're talking about, but on this topic, but it's something we covered today, something we covered last week that you wanted more information on, feel free to raise your hand. You can ask it through the chat or the Q&A section. And this is your time. Like I said at the beginning, this is your time to learn more about this topic. So feel free to ask. If you want to chat or Q&A, that's anonymous. If you're nervous that it's a dumb question, but there are no dumb questions.
There are no dumb questions when it comes to this. Every day we're learning.
Yeah, this is a good exercise for me to go through too, especially this time. One thing I think I mentioned in the presentation, but that I'd like to just reinforce is, that $300,000 sales. Let's say after you did your expenses, it was a small number at the bottom. You said, man, I got to bump that up. I need, to make that 27%. You got to do another $75,000 worth of work to get a piece of that money to stick. What if you just bumped your rates? If we have time, you could look at that again. But what if you just bumped your rates up by 2, 3, 5%? Not try to take on more work, just kick it up a little bit in your sales price. I'm not saying to get greedy, but I'm just saying
Labor.
if you look at the P&L
Mhm.
instead of
Okay.
that, just a quick again, this goes into the what if. Let's say, all right, you're going to do 300 grand this year, but let's say everything else stays the same. All the percentages of what you're doing stays the same. Let's say you bump that 300,000 up to, you did the same exact work as last year, and you went up, I don't know, let's say you went up 5%. So what's that, 315,000? See what it does to the bottom line. You just made 30, now you're making 31%. Now now you get 44 grand. Press undo for a minute while you're on that part of the screen.
Yeah,
Let's see what we get down the bottom.
9.
What a difference.
Mhm.
And all you did was went up 5%. I mean, maybe you can't get the extra 5%, but I imagine that if you sold a job for 10,000 and it went up to 10,500, you'd probably still get the job. And if you did that across all your jobs, boom, because all your expenses, your rent didn't go up, your CMA expenses didn't go up, your insurance didn't go up, your meals and entertainment stayed, all these things stayed the same, your salaries, what you paid to build that, if those all stay the same. There's no reason that all your overhead expenses are going to go up by more volume.
Mhm.
If it's substantial and you need more people to help you with it, it might create another category or some more money in one of those lines. But, if you're just missing the mark, a lot of times, people that don't make it are only off by a few percentage points. It's that, when you look at that bottom line, it's just that little incremental difference. Paying yourself regularly, and understanding, what your margin needs to be, do a trial and error. We're all kind of busy right now, give it a try on one of the jobs and see how it goes. And I think you'd be surprised. And if you need any help at all with any of this kind of stuff, this just happens to be my way of doing it. Doesn't mean it's the right way or the way it's supposed to be done. It's not a canned solution for everybody, but this really, until I started to understand this stuff, we were winging it.
Okay, we do have a question here. So, Catherine, I'm going to unmute you if I can. I have to ask you to unmute, so. See if that works. There we go. You're on. What's your
I
question?
have a question on the officer salary being a sole proprietor. How does that work?
The officer's salary being above the line?
Well, either below the line or above the line. You have the owner operator in the labor parts.
If he's in the shop.
Yeah, so I split, in this example, I split saying that the owner works half the time in the shop and half the time managing the business. So I just kind of split a $50,000, or what did I do there? Yeah, $50,000 yearly salary. I kind of split it into two parts of the spreadsheet, really. Your accountant or your bookkeeper might be able to set it up so that when you're paying yourself, it can go into a different category in the accounting package. At accounting time, he may add those two numbers together for taxes, but I think for understanding your business, it really should show that you're getting paid to build the cabinets.
Right. See, that's the problem. I am the accountant.
You're building the cabinets and the business owner?
I do the books. My husband is the building part.
So, if you each take a piece of the salaries, so to, if you each get a salary, you would put yep, correct. You'd put his pay in the cost of goods sold up above the line, so to speak, up near the top under one of the labor categories.
Mhm.
And you'd put yours in the, where I have officer's salary, could say owner's salary.
Mhm.
So, you're working in the business end of it and he's working in the shop side of it. That's a clear example to me of where those should go.
Okay, so then after that is established, how do I do the taxes part on that?
The taxes on it.
Yeah.
So probably what'll happen is that, and again, depends on what type of, organization you are, what kind of entity, but if it comes down to like a sole proprietorship type of thing or LLC, what'll probably happen is the accountant will take both of those numbers and that's what you'll pay your income taxes on.
Okay, so at the end, we are sole proprietors.
Mhm.
So at the end, we just pay taxes on what's left.
Right. So when the accountant does his thing, it'll look very similar, income, cost of goods sold, but the cost of goods sold will be reduced by your husband's pay. And that would really just, it'll put it at the bottom line next to the profit, and that's what you'll end up paying your taxes on. But at least in this example for estimating and for keeping track of things, you're getting compensated, for the work that he's doing in the shop.
Okay, I understand. So mainly, it's the same bottom line broke out into categories.
Correct.
Okay,
Yep. But my goal is to help people estimate their time building the project as well.
right.
A lot of guys that I've talked to say, oh no, it only cost me so much to build cabinets. I'm like, well, what about your time? I
Right.
just take what's left. Well, let's try to predict what's left.
Okay, perfect. Thank you so
I
much.
hope that helps.
It does, absolutely.
Great. Thanks,
Thank
Catherine.
you.
And I think, let's see anyone else, feel free to ask questions. I thought the one thing you said, Ken, last week that I thought was really beneficial for our members, especially, is to take the time to work on your business.
Yeah, I think that's something my dad told me years ago. It sounds like a cliche type of thing, but every time I take time out to do something like this, I gain more than than anything really. It's worth it. Just the fact that you guys took your lunch break to be on this with us is, you're working on the business. It'll pay dividends. There's no doubt in my mind. If nothing else, it creates more questions for you to find more answers for your business. So, I see a lot of benefit in being a member of the CMA, of going to virtual trade shows or seminars right now, or, when we can open things back up, getting out there and seeing what's going on out there.
Absolutely. And I just want to remind everyone that there is a forums thread for this topic. If you have any further questions after we're done today, you feel free to ask those. And also the link to that will be in the follow-up email I send later today. And Ken will be copied on that email too, if you want to just reply to him and ask that question directly. Again, the templates will both be in the presentation download materials, including the estimate one. I'll add that to that today. And so that link is also in the forums thread. Everything you need to know is there. And again, the job costing presentation that Ken did a few months ago is also on that webinar archives page. And I do encourage you to review that one if you haven't seen it before. Ken, did you have any other parting thoughts?
No, just I am available. I'd love to help. I'd love to, if someone has some critiques or anything that they think is off base, I'd love to learn more as well. So we're all in this together, and I just thought I'd share what I've learned along the way, and I hope it's helpful to everybody else. And I appreciate everyone's time, especially yours, Amanda. Thanks.
Well, thank you, Ken. So the next webinars we have coming up next week is Telling Your Brand Story. It's about the importance of marketing and branding your business. And it'll be a really good one. And then of course, the following week is a closer look to dive deeper into that. In between our next webinar, then we'll have another What's Your Problem? The roundtable discussion where you can speak and share what's going on, share your struggles and successes with the other members. And then on February 24, we have Starting Out on the Lean Journey. And our speaker for that will be Guy Busey, who has spoken at several of our CMA events and other industry events. And he's, it should be a really good presentation. And then again, following up, that will be a closer look. We have more scheduled in the works. So those are all on the website too, on our events page. So, but these registration is open for these already. So you can go ahead and sign up and attend these. So thank you for your time today. I really appreciate you joining us, and take care, and I'll see you soon.
All right. Thanks very much. Thanks, everybody. Bye.